Welcome to the Breakthrough Advisor Podcast. In this podcast, we inspire advisors with ideas and pathways to break through barriers and build a thriving retirement income business. We will interview innovative technology developers, business leaders, and successful advisors, then help you organize and execute these ideas to move your business forward.
Hello and welcome to another podcast, everybody. We're super excited about joining Jack and Kevin today. Now, for those of you who've been subscribing to this podcast and listening to it for a while, you know that one of the things that Jack tries to do is to bring on people who are doing fundamentally unique and different things and bring them to you so that you can either be an early adopter or really kind of jump on the train of something that we see as a great trend that is going to truly make a difference in your practice. And our guest, Kevin Lozer, is no different, and he is going to be asked some wonderful questions by Jack Market about his new system. So Jack, take it away.
Hey, Kevin, thanks for joining us this afternoon.
Thank you, Jack. I'm happy to be here. Thanks for the invite.
So right out of the box, so you live at the intersection of taxes and technology. So that seems to me to be an interesting corner of the neighborhood. So what's happening in that space right now?
Yeah, I think advisors are more and more looking to provide value outside the investment portfolio. And I think clients are starting to demand that more and more. And one of the things that clients are focused on, besides retirement and the investment portfolio, at least at my time as an advisor, they were always asking about taxes as well. Am I optimizing my tax situation? Or sometimes, am I paying too much in taxes? Or I want to pay less. How can I do that? And more, they're looking to their advisors for those answers. And unfortunately, historically, doing tax planning and really understanding the tax code and being able to look at forward-looking tax opportunities is extremely time-consuming. So, and that's where I was at as an advisor. I was an advisor for a decade before co-founding Holistiplan, and I was looking for a solution that allowed me to do tax planning for all of my clients without it taking hours and hours per client. And that was really what started Holistiplan. Roger Pine and I put our heads together. We were looking for the same type of thing. And now we found a good solution for advisors of being able to now provide tax planning, answer those questions for their clients, but it not take hours upon hours to do.
Talk a little bit about the charging, the value, how does that work? If I'm an advisor and I'm charging for AUM today, are you seeing advisors who are saying now for the same fee, you get this? Or are you seeing advisors who are saying we can give you, an upgraded level of service and it's going to cost you that? What are you seeing in the marketplace in terms of this value and fee charging situation?
Yeah, it's both, actually. And it depends on what those advisors' existing fee structures were. Lots of advisors are charging now a financial planning fee and then a smaller AUM amount. I think the majority of advisors, though, are still doing the traditional model, which is charging AUM. And maybe they'll charge for an upfront financial plan or something like that, but the bulk of their revenue is coming from AUM. For those folks, that bulk of revenue are AUM. Most of them are adding this as a service for the same fees they're already charging. Going back to my earlier comment that I think clients and advisors are looking to make sure they can continue. Well, advisors are looking to make sure they can charge those same fees, provide more and more services, be able to justify those fees, and not succumb to what a lot of folks are suggesting might come with like fee compression with all of the other potential competitors, technology-focused competitors that are out there. For the folks that are charging a financial planning fee and a much smaller AUM, it's again both. Some are rolling it into their existing financial planning fee. I'd say most are doing that. I've heard of a few folks that are charging adding tax planning as a service and charging a fee for that.
As a financial advisor, one of the ways that we grew our business was through strategic alliances with folks like CPAs. So, are you finding advisors in any kind of a conflict, with the tax planning value add and that stream of referrals from CPAs? I mean, how do you navigate through that? What are you seeing?
Yeah, that's a good question, and interesting enough. At the early stages, we were getting that question more often. We were getting the question, is this tax advice? Which it's not. What we're doing, what the software does, what the software provides is not tax advice. But we were getting that question a lot and still do today. And we were getting the question exactly like you described it. Is this going to be viewed as stepping on the toes of my clients' CPAs? And we hear that a lot less now because we've done some communication and now advisors are using it and seeing how they can use it as a collaboration with the CPAs. And now the CPAs are seeing advisors that are using Holistiplan and seeing that the type of advice that they're providing and looping the CPA in. I think that's the key. Our software is not replacing what CPAs do. CPAs, tax preparers, I should say, they're not all CPAs, but tax preparers are looking backwards at last year. What happened last year so that I can file the taxes and get them done correctly so the IRS isn't knocking on me or my client's door, right? What advisors are doing is looking forward. Right? What are the things I can do this year and next year or over a 3-year time period that can reduce the overall taxes for my clients this year or in the future? And what advisors are doing pretty well now with the help of Holistiplan, because now we've got some CPA connection friendly features in there too, where they're looping the CPA in, and this is how I would use it too. I provide the analysis to the client and say, let's review it with your CPA just to get their buy-in as well. And then the CPA sees that it's not tax prep at all, right? And that they probably would have never gotten to do that for their client because their client wouldn't have looked at them that way as providing that service. And if they did, they probably would have charged hourly, but charged an amount that didn't pay for the cost of them doing it. So they kind of see the advisor in this relationship now as doing a bunch of the legwork of figuring out what the numbers probably are, and they get to be kind of like the hero that comes in and it basically says, yep, this looks good, or I'd maybe tweak this. And now from a client perspective, you've got an advisor and a CPA on the same page working as a team, and clients love that versus having to manage both relationships.
That's awesome. One of the things that I think is really cool about what Holistiplan does is it really removes a lot of that friction around this tax planning process. If you folks listening aren't familiar with Holistiplan, you essentially upload a PDF of the client's tax return, and then you can start from there and model going forward, do different scenarios, make changes. And what Holistiplan is going to do is give you feedback. It's going to say, here's things that you need to be thinking about. Here's things you need to look at. Here's opportunities, and so on. So it really lowers the barrier to entry, if you will, to adding tax planning to your practice. So on that basis, what kinds of things are you seeing advisors doing to leverage that? If the pain factor of doing tax planning is now much lower, if I were actively engaging new clients today, I would definitely be adding this, not only from a let's look at your income tax perspective, but also to inform me about things like Roth conversions, about ETFs versus mutual funds, and that whole change that's happening from an investment perspective, direct indexing, all those kinds of things. So, what are you seeing advisors are doing now that they have this tool that's so easy to use?
Yeah, one is they're streamlining their back office and being able to provide this tax planning advice to their existing clients at a minimal cost. And like you said, a minimal training. It's for folks that aren't doing tax planning today, we're shy about doing it, we're worried about doing it. This is an off-the-shelf way that you can get up to speed and provide tax planning feedback to your clients really quickly. Like you said, you upload a return and you get a client deliverable with actionable observations. The software is doing that, guiding you through that for you. So that piece alone, not even talking about the forward-looking projections. The other thing we see is advisors using that as a prospecting tool now too, right? Being able to get in front of prospects and say, hey, I do more than investment management. I do more than insurance or estate planning. I'm going to make sure all your taxes are buttoned up too. And here's what I do. You give me your tax return and I'll show you. And we're able to, again, provide like a 2 to 3 page clean report. That's just a wow factor for the clients. And then when they become an existing client, you can start doing some scenario planning for the out years much faster than you could previously with other tools.
Let's move from the hypothetical, if you will, into the present tense. So there's a lot of conversation about, is there going to be a tax increase? Is there not? We've got this big deficit hanging over our heads. And so it seems likely we're going to see taxes increase. A lot of the conversation has gone on this year around things like Roth IRA conversions and so on. So for this fourth quarter, what are some things that, if an advisor, wants to be nimble using your tool, what are the things he needs to put on his planning agenda with his clients?
One, you've got to do that Roth conversion by year end. So you're right. You got to do that in the fourth quarter. And what you need to do you need to assess if the client's in a tax situation where it makes sense to pay taxes voluntarily now by pulling money out of your IRA to put it into a Roth. So that you can save taxes down the road. So you are making a commitment when you make that Roth conversion that you're choosing to pay taxes now. And that's often not what most people are thinking about doing. So you've got to prove that it makes sense to do that. And using Excel or back of the envelope, it doesn't cut it anymore because the tax code has changed so much. There are so many moving parts within the tax system that adding $20,000 to ordinary income via a Roth conversion can have all other kinds of side effects within the tax code that you might not be aware of, or that you can't model in Excel or on a pen and paper. So Holistiplan is designed to do exactly that and a lot more. In fact, we have buttons, Solve for Max and Range Calc buttons that actually can tell you how much of a Roth conversion, how much ordinary income you can add to the client's tax situation before you bump up to a higher tax rate. And again, that tax rate can be driven by more than just their ordinary income bracket. It could be capital gains, it could be AMT, QBI, all kinds of different things can drive that. Without software, you're going to potentially miss some things, and potentially the client's going to have an even higher tax bill than you thought via a Roth conversion. So yeah, Holistiplan makes it really, really easy to do Roth conversion analysis now.
There's a lot of conversation about this tsunami of people retiring because of post-COVID, right? And the consequence on their Social Security of different tax scenarios, and the consequence of withdrawing their Social Security benefits and how that impacts their taxes. So is that another one of those opportunities for Q4? How should advisors be thinking about that? That would be a little bit different approach to it than the when should I claim Social Security question, right? But what's the consequence of claiming it, and what's that going to look like to my taxes? And then that kind of trickles down into maybe I do need to do a Roth IRA conversion now, or maybe I don't. And so those things, to me, kind of get mashed up together. What do you think?
Yes, definitely. So I mentioned a few things that impact taxes. You mentioned another one that I didn't mention, Social Security, right? So you got to factor that in too. If you're going to do a Roth conversion, that's going to increase your income in this year. Well, then if you also decide to take Social Security early this year, now you can probably take less of a Roth conversion because you're going to make more of that Social Security taxable, because Social Security has a kind of a laddered tax system as well. So all these things, anything that you're making a decision on relating to a client's income this year, next year, 2 years from now, it all has to be part of a plan that includes all the various potential income streams. And Social Security is certainly one of them. And while Holistiplan doesn't like you said, doesn't tell you whether or not you should take Social Security to maximize your Social Security benefit. There's other software out there that does that. But what we can do is you can plug in what that Social Security amount's going to be in a given year. We calculate what the taxable portion of that's going to be. And then when you play around with the other numbers like a Roth conversion, you're going to see that the taxable component of Social Security potentially increases because of the Roth conversion that you're doing. Or if you're realizing capital gains, that can have an impact on Social Security taxation. So yeah, these are all intermingled parts, and you got to pay attention to all of them.
So what other things are you seeing advisors or seeing that advisors should have on their planning agendas for their clients in Q4?
So besides taxes, Social Security, that type of thing?
Yeah. Well, or different facets of that to get to that conversation. Yeah.
Yeah. Estate planning, insurance, all of those should always be factored in. And by the way, those things impact taxes as well. So that's another situation where maybe you're doing some tax modeling, right, in the fourth quarter, trying to figure out if it's a Roth conversion or Social Security or realizing some gains or taking some losses. Well, that tax situation could drive some other decisions, other aspects of comprehensive financial planning, like insurance. Maybe not so much estate, but it could, depending on the size. So that's part of why we focused on taxes from the outset, is because what we've learned as advisors is almost every tax decision you're making, and lots of investment decisions you're making, lots of insurance decisions you're making have a tax impact. So taxes, more than anything else, maybe taxes and investments, are the things that are intertwined with everything we do as an advisor for clients. I mean, even like the tactical decisions we help with, like mortgages, HSA contributions, just all kinds of different stuff that we do for clients from a tactical standpoint are going to have tax implications from it.
You mentioned the intersection of taxes and investments, and I immediately think about tax alpha. So is this a tool that an advisor could use to add tax alpha to a client, or are those tools more resident within the investment platforms?
So that's a good question. I think you're going to use both in some cases, because those investment modeling platforms are going to probably be able to show you the results of moving assets around into various buckets. But you're also able to identify the opportunity to do that from Holistiplan. So you upload a tax return, and one of the things that might come up in the review, with the software's review, is that dividend income, for example, most of it is non-qualified. So you're not getting the preferential tax rate on the dividend income being produced from the portfolio. Well, that's going to be a red flag that's alerted in the system. And you're going to be able to then say, well, maybe I need to take a look at the portfolio. Now we turn to the portfolio rebalancing tool or whatever you have for the portfolio side, and see if there's some trades that need to be made to improve the tax efficiency of the portfolio. Because that's really when you're talking about tax alpha on investments, it's really making the investment portfolio more tax efficient. And one of the ways to do that is asset location, right? Putting certain types of assets in tax deferred accounts, other types of assets predominantly in after tax accounts.
And then the harvesting of gains and losses, before the end of the year is obviously an important planning item to have. Is that something that's feasible for an advisor using Holistiplan, or is that somewhere where they're going to need to get some assistance?
No, that is you can do that in Holistiplan for sure, and that's where those buttons that I mentioned earlier, the Solve for Max button, play a big role in that. Particularly if you're realizing capital gains, we're going to be able to provide you with a click of a button, provide you the number of how much you could realize in capital gains. So gains harvesting before the end of the year, where the client stays in the same tax rate that they are today. So, and as far as losses, same thing. You're able to model taking gains, taking losses, see the impact of the tax situation within Holistiplan.
So maybe to go back to that intersection of taxes and fintech, you spend a lot of time talking to advisors. You're at a lot of conferences speaking and engaged with advisors. Outside of Holistiplan, what other things are you seeing or hearing that really smart advisors are doing that's innovative, that's bringing value to their clients?
From a tech standpoint, I think there's more and more investments being made in one, streamlining the advisor's lives from a data entry standpoint. And that was part of what we tried to do with and have done with Holistiplan. I think advisors are getting really good at there's a lot of great marketing content software programs out there now that are allowing them to spend less time each day building content, thinking about what content to send their clients, carving out their client base, sending some content to some clients, other content to other clients based on their client profile. I think that's another thing where there's a lot of fintech investment being made in helping advisors market better, but also market much more efficiently than they've been able to do in the past.
This has been a great session. Thank you, Kevin. For all of you advisors who might be looking at a tax planning solution, really encourage you to take a look at Kevin's firm at Holistiplan. Super easy to use, gives great insights, makes you look like a real pro. So it does a great job. Kevin, thank you for taking time and joining us today. We really appreciate it and look forward to more great work from your team at Holistiplan. Thank you.
Great. Thank you, Jack. Appreciate it.
Matt.
If you have not subscribed to the podcast, please make sure that you subscribe to the Breakthrough Advisor podcast. Super easy. You just literally click the subscribe now button. And of course, if you know any financial services professionals who, would love to be able to add what Kevin talked about, please share this podcast with them. We are all smarter when we all work together. And we'll also make sure that we have links to everything that Kevin talked about today in our show notes today. So for Jack, everybody at InsurMark, and Kevin, this is Matt Halloran, and we'll see you on the other side of the mic very soon.
Thank you for listening to the Breakthrough Advisor podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of InsurMark. The content has been made available for informational and educational purposes only.